Sometime Friday morning, a company most people couldn't have named 6 months ago lists on the Nasdaq in the largest ADR offering in market history. The same week, its own board is quietly pulling money out of the very business analysts say justifies that valuation. That contradiction is this week's whole AI trade in one sentence. Good morning. It's Monday, July 6th. I'm James Carter with Eleanor Whitfield and Marcus Brooks. Grab your coffee. The long weekend's over. We've got a record Dow to explain. A Fed minutes release Wednesday that could reset the whole rate debate, an SK Hynix listing that puts a number on this chip fight, and a crypto market that finally stopped bleeding. Eleanor, Marcus, morning.
Morning, James. Feels like it's been a longer weekend than 3 days.
Because it was. Markets were dark Friday too. This is basically our first Monday in 5 days.
Right, quick housekeeping before we get into it. Saturday's show left 2 live tests on the board that still haven't come due. Eleanor, yours is the semiconductor ETF reclaiming its pre-sell-off level by Wednesday's Fed minutes.
Still open. It hasn't traded since Thursday, so there's nothing to grade yet. I'm not going to manufacture a verdict out of a market that's been closed.
Same with mine. Micron holding above 1100 into the week. We get real volume back today for the first time since Thursday, so by Wednesday we'll actually know something.
Fair, we hold both, no forcing it. For the record, season standings sit at Eleanor 1-0, Marcus 0-1, small sample, plenty of time to even it up.
Please don't remind me every morning.
I absolutely will. Let's start with what we actually missed since Thursday's close, because it was a split tape.
It really was. The Dow punched to a fresh record, 52,900, up over 1% on the day. The S&P was basically flat, 74.83, sitting right next to its own record without quite touching it.
And the Nasdaq was the odd one out, down 0.8%, 25,832, because mega-cap tech and chips cooled off into the holiday.
So, 3 indexes, 3 different stories, same day.
Which is the tell, honestly. That's not one market, that's rotation. Money moved out of the priciest, most AI-exposed names and into everything else, and the VIX actually confirmed it, down to 16 and change from 18 the week before. That's not a market bracing for trouble.
Even with inflation still running hot, May's CPI print was 4.2% year-over-year, a 3-year high.
Even with that, which tells you something important, the markets decided that print is an energy story, not a demand story. Oil spiked because of the Iran conflict that fed straight into headline CPI, and investors are choosing to look through it rather than treat it as broad-based inflation coming back. That's a bet, not a certainty.
And it's the same bet JP Morgan's making, more or less. They took their full-year S&P target up to 7,800 a few weeks back. Another 5% of upside from here, after everything we've just described. The top-down call for a market top is still very much the minority view on the street.
So, nobody serious thinks the index itself is broken.
Correct. The disagreement isn't about the index, it's about what's underneath it, which is exactly why a day like Thursday, one index up, one flat, one down, is more informative than a day where everything moves together.
No argument there. And then markets went dark for 3 days, which under normal circumstances would be a nothing weekend, except the Iran ceasefire had to hold through it with nobody able to react in real time if it didn't.
And it did hold.
It held, but held is doing some work in that sentence. It's been shaky before. There was a stretch this spring where a ceasefire got announced and then violated within days. Oil's still trading above where it was before any of this started, which tells you the market hasn't fully priced out the risk of it breaking again.
Bitcoin's the other half of the weekend story, and this one actually surprised me a little. It touched a 2-year low near 58,000 in the back half of June, and it's clawed back above 62, even touching towards 63 over the last few days.
On a weekend with no fresh catalyst?
On relief, mostly. Same trade as the ceasefire holding. Risk assets breathing because the worst-case scenario didn't happen.
I call that a fragile bounce, not a trend. We'll get to crypto properly in a minute. There's more underneath it than just relief.
And the reopen itself, our own desk's read this morning is cautiously. Futures aren't gapping in either direction, trading's thin, and the tone is tentatively constructive rather than defensive.
Then is the key word. It's a Monday off a holiday weekend. Volume takes a few hours to show up for real. I wouldn't read too much into the first 30 minutes either way.
Agreed. The tell today isn't the open, it's 10 o'clock.
Let's talk about today and this week then, because there's an actual data point at 10 this morning, ISM Services PMI for June.
which matters more than a services print usually would, because the manufacturing read already slipped 53.3, down from 54. If services follows it down, that's 2 consecutive signals the economy's decelerating broadly, not just in one corner of it.
Here's the part I find genuinely funny. I was looking at the prediction markets over the weekend, and they're not clustered around a consensus number at all. It's basically a coin flip between comes in strong, north of 56, or falls off a cliff, under 48. Nothing in the middle.
Wait, that's a strange shape for a forecast. Usually these things cluster.
It is strange, and it tells you something real. Nobody actually agrees on whether the softness in the labor market is spreading into services, spending, or staying contained to manufacturing and a few pockets of hiring. When traders can't agree on the shape of the outcome, that's usually a sign the underlying data itself is genuinely unsettled, not that anyone's being lazy about it.
Give me the plain version. What does services PMI actually measure for someone who doesn't trade for a living?
It's a survey of purchasing managers at service businesses, everything from airlines to hospitals to your bank, asking if business is expanding or contracting that month. Above 50 means more of them say expanding. It's a read on the 3/4 of the economy that isn't factories.
And the reason I keep coming back to it. Thursday's jobs miss was framed as a leisure and hospitality problem, restaurants and hotels pulling back hiring. Services PMI is the closest real-time check on whether that's spreading into how those same businesses see demand, not just staffing.
Which is fair, though 1 month doesn't make a trend either way. I'd want 2 consecutive soft prints before I call it deceleration instead of noise.
Useful. And the big one this week is Wednesday.
Wednesday, 2 p.m. Eastern, FOMC minutes from June. The first one's released under Chair Warsh, and the market's going to comb through them for one thing. How united the committee actually is behind his hawkish line, versus how many of them are more worried about the jobs picture than he's letting on.
The dot plot already told part of that story. 9 members now see at least 1 hike this year, up from a much more split committee back in March, and the median end-of-year rate estimate jumped to 3.8 from 3.4. That's a real hawkish lurch, not a rounding error.
And Warsh himself didn't submit a dot.
Which is its own signal. Either he didn't want to tip his hand publicly, or he genuinely hasn't decided. And given how short and pointed his post-meeting statement was, I lean toward the first one.
Give me a level for Wednesday, Eleanor. What's the actual tell in the text, not the vibe?
Watch the vote count they disclose, not just the dot plot summary. If the minutes show real dissent, several participants pushing back on the hawkish framing rather than 9 falling in line quietly, that tells you Warsh is managing a divided committee in public and a united one in private, or the reverse. Either way, the gap between the statement's tone and the actual vote is where the real story lives.
And for what it's worth, the futures market isn't pricing this as a July hike scare. CME's own tracker has better than 3 and 4 odds. The Fed just holds again at the end of the month. The minutes matter more for the tone into September than for anything imminent.
So Wednesday's more about reading intent than expecting action.
Exactly right.
Thursday morning, Delta and Pepsi report, unofficial kickoff of earnings season, a read on travel demand and whether consumers are trading down. Then the following Monday, banks start, which is the real test of whether the labor softness Eleanor keeps flagging shows up in credit.
Busy week. Let's take 30 seconds off the tape. I need to say something out loud that I've been sitting with since Saturday.
Go ahead.
I spent part of the holiday trying to teach my dog to shake, and 4 days later, the most she's learned is to stare at my hand with what I can only describe as contempt.
That's not a training failure, that's a personality assessment.
Some of us use the weekend to read Fed transcripts, James.
I'm aware, and I resent it slightly. Okay, back to work. The chip fight, because this is the one you two still haven't settled, and Friday just handed it a headline.
It did. SK Hynix lists on the Nasdaq Friday, $29 billion raised, the largest ADR offering ever done. And it's happening in the same stretch where the company's been reallocating capacity away from HBM expansion and into commodity DRAM. You don't do that at the exact moment. Demand is supposedly bottomless.
I'd push back on exact moment, though. SK Hynix is also the company posting a 72% operating margin last quarter, up from 58% and holding something like 56% of global HBM revenue. That is not a company in trouble reallocating out of desperation. That's a company chasing the fattest margin in front of it, which right now happens to be commodity DRAM pricing near 90% margins.
Hold on. Translate ADR for me before we go further. Some of the audience just heard largest ADR ever and nodded along like they knew.
American Depositary Receipt. It's how a foreign company's shares trade on a U.S. exchange without directly listing there. SK Hynix trades in Seoul. This lets U.S. investors buy a dollar-denominated version of it on the Nasdaq starting Friday. 29 billion is an enormous one, bigger than any ADR that's ever priced.
Got it. So, Eleanor, give me a level, not a vibe. What would actually change your read here?
Real HBM order cancellations, not a capacity shift. Right now, all I have is a profitable company moving resources toward a fatter margin, and Marcus is right that on its own, that's not damning. But layer it on top of the Kospi circuit breaker a few weeks back, and Nvidia sitting well off its highs, and I still think this is the market's first real gut check on whether AI infrastructure demand is as bottomless as the capex has assumed.
And Micron's the counter to that gut check. HBM production sold out for the year, HBM4 revenue already passed $1 billion, multi-year contracts locked in. You don't starve a product line you can't make enough of.
How does a listing that size even move the stock day to day, practically speaking?
A raise that large usually means index inclusion follows fast, which pulls in passive money almost immediately regardless of anyone's view on HBM. That's part of why I want to see Friday's actual open. A pop driven by mechanical index flows tells you nothing about demand, and everyone will be tempted to read it as a verdict anyway.
Which is a good catch, honestly. The flows will be loud, the signal underneath them won't be.
Steelman her case for me, 10 seconds, forget your own view.
Fine, if I'm arguing her side, the fact that the most profitable memory company on earth is diversifying away from its hottest product at all is information. We found a fatter margin, and we're less sure about the multi-year demand curve, produced the exact same headline from the outside. That's a legitimate reason for caution.
Eleanor, return it.
The VIX stayed at 16 through all of this, nowhere near a real risk-off spike. If this were a genuine demand-side crack in the biggest trade of the decade, more than one sector would be flinching. It isn't. That's the strongest part of his case, and I'll say so.
And you're still not converging.
The no.
No. Ask again after Friday's listing actually trades and we see how the market prices SK Hynix on day one.
Then that's the tiebreak, how SKHY opens Friday, and whether Micron's still above 1100 by then too. Circle both. Crypto. Walk me through the outflow reversal, because that's a real change from where we've been for a month.
The ETF outflow streak ran 10 straight days, over $2.5 billion pulled, the ugliest stretch since these funds launched. It broke Thursday, 221 million came back in, the biggest single inflow day in 2 months.
One day. I want to be precise about what that is. It's a relief rally riding the same Feds on hold. Trade that lifted the Dow, not a conviction rally. Bitcoin's trading like a leveraged bet on rate policy, not the scarce asset story it's sold as.
Fair, but there's a second layer worth putting on the table. Wallets holding 1,000 plus Bitcoin bought roughly 270,000 coins through the worst of the outflows, the fastest accumulation pace since 2013. Whoever's selling through the ETF wrapper and whoever's buying on chain are, genuinely, different people.
So which read wins?
Neither, yet. That's the honest answer. I'd want to see the inflow streak survive 2 or 3 more sessions of real volume before I call it anything more than a one-day bounce.
Agreed, actually. Today's the first real volume day since Thursday. If outflows resume, this was noise.
Give me a number then. Where does this stop looking like noise for you?
Above 63,000 and holding for a couple of sessions, on rising volume rather than a thin holiday tape. That's the difference between relieved and recovering.
I'd add the mirror image. If it slips back under 60, fast. That's the ETF sellers reasserting themselves, and the whale accumulation story stops mattering because price is the only vote that counts short term.
And the Clarity Act still sits over all of it.
It does. The floor vote that was supposed to happen before the holiday got pulled, stuck on an ethics provision about officials' financial ties to crypto. They need 7 Democratic votes assuming Republicans hold together, and that's been almost there for 2 months.
Which is the one spot I'll agree with him without a fight. Regulatory limbo is bad for everyone in that trade, bulls and skeptics both.
There's a second deadline in here too, right? The stablecoin rule?
The Genius Act's stablecoin framework hits its deadline, July 18th. That's a couple weeks out, so it's not this week's story, but it's the first real test of how Washington treats existing stablecoin issuers under the new rules, and it lands regardless of what happens with Clarity.
2 regulatory clocks running at once, on top of a price that just found its footing. I wouldn't call that a clean setup for anyone long this trade.
All right, closing calls. Specific, checkable by tomorrow's close, not eventually. Eleanor.
Mine's on today's ISM print. If services comes in under 50, actual contraction, not just a soft expansion, I think the one bad jobs report story becomes the economy's turning story by tomorrow's open, and that's a very different show we're doing Tuesday.
Mine's Micron. If it's still above $1,100 at tomorrow's close on the first full volume day since Thursday, that's the sentiment, not fundamentals case surviving actual pressure, not just a quiet week.
Eleanor watching the whole economy's temperature, Marcus back on his one stock. What would make you concede early on Micron before tomorrow's close even arrives?
A break below 1,100 on real volume. Anytime today. I don't need to wait for the print if it goes decisively.
Noted. We'll hold you both to it tomorrow. So here's today, ISM Services at 10, the single most important 30 minutes of the session, and everything else is context around it. A reopen that's finding its footing rather than gapping either direction, oil still carrying a premium off the ceasefire, and Bitcoin trying to prove 62, 63 as support and not just a bounce. Then the week builds. Wednesday's Fed minutes, Thursday's Delta and Pepsi kicking off earnings, Friday's SK Hynix debut, putting a real price on this chip argument. Watch that 10 o'clock print first. If it breaks under 50, everything else this week gets read through a much more nervous lens. If the show helps, follow Nova Ventures Daily wherever you get your podcasts, and catch our live takes all day at Nova Ventures CEO on X. That's your Nova Ventures morning brief. Have a great Monday, and we'll see you tomorrow.